Hello, Maverick traders. Welcome back to your market roundup for May 15th. Corey here with you. Nice to see all of you. Let's talk markets here. A little bit of a quiet day. Dow and S&P flat on the day. The Nasdaq a little bit better, up 0.5%, and really Russell Small Cap Index was the outperformer, up over 1% on the day. Oil with a bounce back, up 1.5. Gold flat, and if we look at the daily news, gold was actually in the news. Newmont Mining is acquiring Newcrest Mining for $17.8 billion. Now, a big gold miner acquiring a smaller gold miner, is that bullish for the metal? Well, it tells you that Newmont Mining is bullish and they want exposure to more gold and they're willing to pay for it. But the mining companies traditionally have been very bad at timing their own success. In fact, if you look back through history, back around 2011 or so, when gold had accelerated and first went up to this 2000-ish an ounce, most of those mining companies removed their hedges. So if you look at history, they got most bullish and said, look, we're hedging, we're pre-selling our gold, it's costing us money, we're going to remove all of our hedging programs. And what did the next few years bring? Massive declines in gold, and that hedging removal cost them hundreds of millions in some case. So these miners, they always get most bullish at the most inopportune times. Now, I'm not calling a top in gold. The charts look very bullish, but just be aware they're always going to tell that bullish story, and they get caught up in the euphoria as anyone else. Debt limit still a long ways off. Biden and McCarthy and these negotiations are going to be ongoing. You're going to continue to hear about it. Now, let me let you in on a little bit of a secret. I don't know exactly how it's going to go, but there will be some resolution. Will people panic and will they say it's different this time and that we're going to default and so on? Look, there are ways and means for the U.S. to not default, whether they have to borrow money, print money essentially out of thin air, do whatever they have to do. There are ways for them to get access to capital and to make sure that they don't default. And at the end of the day, there's going to be some resolution. Not everyone's going to be happy about that, but this is the way these things go. So if you say, this is a catastrophe and so on, I get it. There's going to be some volatility and people are going to panic as these negotiations go on a little bit, but there will be some form of resolution, be it an extension of the deadline, etc. Advanced decline, about 30% of stocks going down, about 70% going up today, and the 50-day moving average right about where it's been, about half and half, stocks above versus stocks below. Let's look at a few things here. And the chart, I continue to highlight this cup and handle, which I think is still intact and still leads to an upside breakout. So you have the big cup, the more shallow handle, and an upside breakout looms. The fact that we're building up and storing this momentum, you're building a base, a foundation to build upon, and a lot of times that creates an even bigger acceleration. So I'm optimistic markets are going to go higher. Look at the Nasdaq, it's already broken to new highs. This is an uptrend, my friends, higher highs and higher lows. The Nasdaq continues to lead. As we look at the heat map today, as we said, utilities weak. There are little pockets of strength. It's nice to see financials bounce back. You need to see the bullishness spread out, widen out, more market breadth. Semiconductors really strong and purely in the green today. So more bulls than bears, more advancers than decliners. So there is some building of upside. And again, like we said, small caps and some of these areas that have lagged were the strongest performers for today. That is a good sign for this market going forward if that can continue. We're above the 20, above the 50. We're bullish. Are we going anywhere right now? No, it's just churning sideways, but it looks like an upside breakout still looms. Let's look at some ideas on the bullish and bearish side. We'll start with the bulls. Here we've got Carnival. It's in a buy the dip setup. You can see the 2050 crossover. This is a more speculative area and name, but ultimately could see a nice spike to the upside. Not an area that I trade a lot, but I think this makes sense in terms of where capital should continue to rotate. Mercado Libre. I love the internationals. I've had Japan in here for the last couple of weeks. It continues to accelerate to new highs. This is an area of strength. Mercado Libre, basing, and I suspect will break up and out from here. And then another international name. This one reports earnings, and here's what I hope happens. I hope it gets knocked back. So I kind of look at this as that cup and possible handle. It reports earnings, and if we get a drop back down here, that would be a buy the dip opportunity. Now, if it's cascading lower on huge volume, I won't touch it. I'm not going to get in before earnings, but if we can have a mild pullback post earnings, I suspect that will be a buy the dip scenario that I'll be looking at. And if I like the setup, I'll pull the trigger. On the bearish side, Crocs, here we've got a stage 2 breakdown on heavy volume. We've now bounced up. Again, you've got patterns within patterns, right? Inverse cup and handle. It's bounced on this support. I think that we continue to push to the downside. So sort of a pairs trade of consumer names. Long a Carnival and short a Crocs, something to that effect. That's how the charts look to me. On the bearish side, I highlighted Deere last week. It was at 380. Now it's at 370, but still, I suspect this descending triangle type of pattern is intact, and I think we pierce those lows. So agricultural stocks, Mosaic, a lot of these names continue to make lower lows, and they've been a good area to be short. And then last but not least, this is not one that wants to avoid volatility because Tesla has a lot of that. So if you like the high beta, high volatility space, you can see we filled the gap and failed. We should continue to progress to the downside. The automobile manufacturers have a ton, just so much competition. Now you've got Rivian, and you've got, of course, the GMs and the Fords of the world. You've got some companies that are half companies, like the Nikolas, but still trying to produce these EVs, and there's just so much competition that it's almost Tesla's had to cut prices. It's just they've been so successful that they've actually created more competition for themselves. And right now, I just don't see that as a great space. And I think that this news announcement about Elon Musk finding a new CEO for Twitter and so forth, I think he's concerned about Tesla. I think there's a reason that he wants to get back to his bread and butter and try to fix Tesla because some things are going wrong there right now. So market outlook, cup and handle is still intact, watching for a huge move higher, some sort of exhaustion before I change my opinion. My opinion has been for really the past weeks and past couple of months that we just continue to progress to the upside. And we continue to go there. Now, I get that we're chopping right now, but I still think that upside breakout is that final phase. Powell speaks, I believe, on a panel tomorrow with Ben Bernanke, former Fed chairman, on Tuesday. And then on Friday, we'll speak once again. On the earnings side, Applied Materials, Alibaba, Baidu. So if you're playing Chinese internet, there's some names. Cisco, Deere, Foot Locker, Home Depot. I mentioned C Limited, Target, TJ Maxx, Walmart, and others. So we're still in earnings season. We're kind of winding down, and that's where you get a lot of retail type of stocks. Have a great rest of your day. Hope you enjoyed the market roundup, and we will see you next time.